Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY22 results conference call of TCI Express Limited, hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhijit Mitra from ICICI Securities Limited. Thank you, and over to you, sir.
Yeah, thanks, operator, and good evening to all the participants for joining in. We are here to discuss Q3 FY22 results of TCI Express. From the management, we have today Mr. Chandra Agarwal, MD, and Mr. Mukti Lal, CFO. So without further ado, I hand it over to Mr. Chandra for his opening remarks. Over to you, Chandra. Hello, Chandra, are you there? Operator?
Mr. Chandra Agarwal? Ladies and gentlemen, we seem to have lost the connection for Mr. Chandra Agarwal. Please stay connected while we reconnect him.
We are here. Can you hear us? Can you hear us?
I'm so sorry, sir. We are not able to hear you.
Can you hear me now?
Much better. Please go ahead.
Okay. Sorry. Good evening, everyone, and welcome to Q3 Financial 22 earnings call of TCI Express Limited. I would like to thank all of you for joining us here today. I hope you and your loved ones are staying safe and healthy. I will first start with industry and business overview for the quarter, and will then hand over the call to CFO Mr. Mukti to discuss the financial performance of the company of the quarter. Our earnings presentation has been uploaded on the website and stock exchange, and I hope you have had a chance to review it. Q3 Financial 22 started on a positive note, with strong economic activity in October ahead of festive season and broad-based recovery visible across industries. The recovery trend was visible in both the data for index for industrial production and e-way bill generation in October. However, in November, the e-way bills declined to 5 months low as demand moderated after the festivities. But recovery was again visible in the month of December. As a result, the third quarter for logistics industry remained mixed. In this background, the company delivered highest ever quarterly revenue from operations of 287 crore, registering a growth of 9% year-on-year and 5% on sequential basis. The top line growth was primarily driven by both SME customers and corporates. EBITDA for the quarter stood at 49 crore, registering a sequential growth of 5% with margin of 17%. Margins remained stable, backed by higher capacity utilization and operational efficiencies. Our profit after tax stood at 35 crore with a margin of 12.2%. On year-to-year basis, the company has delivered a stellar performance with the revenue from operations at 783 crore, a growth of 39%. EBITDA grew by 55% to 131 crore, and PAT grew by 60% to 93 crore. In the light of strong performance during the first 9 months of the year, the Board of Directors has recommended a second quarterly dividend of 3 per share, taking total dividend to rupees 6 per share for 9 months financial 22, representing a payout of 300% on the face value and 25% on the EPS. To give you an update on the construction of the Gurgaon Sorting Center, I would like to inform all of you that it is going as per plan. The construction is completed, and we are in the process of applying automation. It will be fully operational next month in the first week of February 22. TCI Express will become the first B2B express delivery company in India to install a conveyor belt system for heavy cargo at the sorting center. Now, this will help in reducing trucking halting time by around 40%, which will improve overall operational efficiency. We will be carefully evaluating the success of this automation at this sorting center, and subsequently implementing the complete automation strategy at the other sorting centers. During the quarter, we have also added 5 new branches, mainly in South and North region, to penetrate deeper in the key growing markets. In addition, our recently announced new offerings are getting good traction among the customers, especially Rail Express, where we continue to see new customer acquisitions every month. Looking ahead, the threat arising from Omicron variant is expected to be temporary, and the time restrictions in certain states has impacted the movement of goods. However, we are expecting a quick recovery in coming months. Overall, logistics industry is an integral part of country's economic growth, and the government's increased focus and spending on developing road and railway infrastructure will set a course for rapid growth for logistics sector in India. In addition, the demand for logistics services is poised to grow with the increase in manufacturing activity under the government initiative of Make in India, and also lead to increase in SME customer base engaged in the trading of goods. TCI Express, with its asset-light model and comprehensive express service offerings, is well positioned to capitalize on the growing market opportunities and deliver long-term sustainable growth. With this, I would like to now hand over the call to Mr. Mukti to discuss the financial performance of the quarter.
Thank you, Chandra sir. And now I would like to discuss the financial performance of the company. During the quarter, our revenue from operation is 287 crore rupees for Q3, as compared to 273 crore in Q2 of FY 2022 and 262 crore in Q3 of last year. The total income for the quarter was 289 crore as compared to 276 crore in Q2 FY22 and 264 crore in Q3 of last year, registering a sequential growth of around 5% and 9.4% year-on-year basis. This growth can be attributed to multiple factors like growth in demand from SME customers, higher capacity utilization, increased demand from rural areas, and festive season. Overall, the total income for the 9 months of the year stood at 789 crore as compared to 569 crore last year, registering a significant year-on-year growth of 39%. Our EBITDA stood at 49 crore with margin of 17%. Sequentially, the EBITDA has grown by 3.5% and 5% on year-on-year basis. This improvement can be attributed to growth in top line as well as improvement in overall operational efficiency. I am happy to report that for the first 9 months of this year, our EBITDA was 131 crore as compared to 85 crore for the same period last year. So the net profit for the company in Q3 was 35 crore with a margin of 12.2%, and net profit for the first 9 months was 93 crore with the margin of 11.8%, registering a stellar growth of 60%. We have incurred a capex of rupees 65 crore towards construction and automation of our new sorting center at Gurgaon and Pune. I am happy to report that we are completely on schedule to make this sorting center fully operational by February, and which will enhance overall operational efficiency and ultimately drive profitability further. Thank you very much, and now I would like to open the floor for question and answer. Over to you, please.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Alok Deora from Motilal Oswal. Please go ahead.
Good evening, sir, and congratulations on decent set of numbers. Sir, just wanted to understand how much would have been the contribution from these newer segments, new segments like C2C Express and cold chain in our total revenue during the quarter?
Yeah. So it is in total, it is around 12% to overall revenue of our this quarter in these other services.
Okay. Okay.
Yeah. Yeah.
And also, there was a very strong, as in a massive cut in diesel prices in November. So, since the margins have been largely flat, should we understand that it was completely passed on like immediately, or we didn't really get any benefit out of that?
No. So if you see on this year, interesting thing has happened because in October there is a sharp increase happened in diesel prices, and that was the peak month. So we we just hold the passing on to customer, and then subsequently this on Deepavali day it has been reduced. So rather is impacted our margin level, and it is keep as a flat one. So that was a temporary one. Yeah.
Sure. And also, just wanted to understand, once this Gurgaon facility gets operational by February or say by March, so how much can we see improvement in efficiency or some color on that, if you can just highlight? Because if we are doing this first of a kind company in doing B2B automation, so just wanted some insights in terms of how much it could reflect in the margins, if any significant number there. Thank you.
Yeah. So, theoretically, we have done on everything on a Excel sheet because it's yet to be start. So, it's very early to say something on, practical way. But what we have planned, so we will be ultimately able to reduce our, truck halting time on this center almost 40%. And then it will be ultimately improve my operational efficiency. And we expect it to be, reduce the direct cost by at least 50 basis point to 70 basis point in our overall direct costs in a 1 year time.
Sure. Sure. Yeah. And then after this, it will happen in Pune.
Yes. After, successfully implementation of that and taking taking that experience, then we will be implementing the next in Pune.
Because this will also involve a lot of the reorganizing of the routes, the short routes, and the long routes and all of that. So, once we get this going, I believe that the first month will be trial and error. And then we will be going ahead and implementing. So, the real benefit would probably come in about a month and a half time. And that would be the clear-cut learning point. And possibly by April also, if everything is in order, we can place for the automation Pune also in the first quarter of next financial year.
Sure, sir. Sir, just one last quick question. Sir, how is the competition now in the B2B side? If you could just throw some color on that in the Express B2B segment.
So it is still very, very largely unorganized, and I'm not seeing any major shift happening in any direction. The problem is that operating efficiently, profitably, and delivering consistently to customer in these challenging times requires the company to be very solid, have a very solid foundation. So there isn't any company like that at the moment. So if you see all the, if you do an industry analysis, on the ground is a totally different picture than versus what is, what is being reflected, say, in a Concall and ultimately the results decide what's really going on. So if it's the same on the ground as a result, then you know that the company is moving in the right direction. But if the things are not good on the ground, then immediately it will not reflect in the balance sheet. So saying that competition is facing a lot of challenge. A lot of competition has kind of like has really bear the brunt of this unexpected fuel price, and I think that will impact their overall yearly performance.
Sure. Thank you and all the best, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Dipesh from Equirus Securities. Please go ahead.
Yeah, hi sir. Thanks for taking my questions. So just continuing on the competition part, post the spot-on acquisition, any changes you're seeing? I understand the market is fairly unorganized, but in the organized space, you are the 4 bigger guys right now. And any change in the pricing strategy of the other companies that you're seeing and the movement in the wallet share of the client? Anything you can highlight?
I don't know which 4 companies you're talking about. I only know 2. So, but amongst the 2 companies that I know of, our pricing has been increased, and it would be I will not be able to talk about the other competition.
Sure. So, but the Safe Express, Gati, and Spot-on are bigger than you in terms of revenue. Isn't that right, sir?
I cannot say because they are not. I don't have their balance sheets, so I have not seen it, and I don't know what it is because each one has their own set of different businesses in those companies. We are nothing but a pure play express company. We only do express. We don't add this, that, or warehousing drama, all that. We don't do any of that. It's very hard for me to say on those companies.
But sir, within your clients, you are not facing any pressure on the pricing, right? Because those guys are being more aggressive now.
No, we have actually increased the pricing and very effectively, and there has been no resistance. And I think what matters is that with the price increase, we're also giving a decent level of servicing also. Other companies are not able to pay their vendors, is what I heard. They're not able to pay their truck drivers. So with that cash crunch, I don't think they're able to give good service at all. Hence, they're not able to even increase their prices.
Got it. And sir, given the 9-month results and the restrictions that you are seeing in this quarter, so what will be your growth guidance for the full year? I think you started the year, you gave some guidance, but how will you revise that now?
So we will be finish in the range of 30 to 35%, and profit margin would also be like 35 to 40%.
Profit margin in the sense growth you're saying?
Yeah, growth in PAT level.
Understood, sir. And sir, if you can give the total tonnage that you handled in this quarter.
This quarter we have around 230,000 ton tonnage we handle in this quarter.
Got it.
And in last 9 months, in total we have handled almost 630,000 ton. Yeah.
Got it. And lastly, sir, post this Gurgaon Automation Center being completed, what is the capex plan for the next year? Because you have given the guidance of 400 crores for 5 years, but any particular city that you're targeting for the sortation center next year?
Yeah. So we again have the same 100 crore rupees capex plan for the FY23, and we will be spend the money basically for Chennai, where we want to be construct that sorting center, Chennai and Nagpur, and we want to be a automation in Pune sorting center.
Got it, sir. Got it. Okay, sir. Thank you and all the best.
Thank you. The next question is from the line of Sandeep Agarwal from Naredi Investments Private Limited. Please go ahead.
Sir, Ravi Naredi here. Chandarji, you are doing again fantastic. After 400 capex, what is our next plan in financial year 24 onwards?
So, Mr. Naredi, we will do the same thing of, first of all, thank you for your encouragement. We will do the same investment of 500 crore in the next tranche. And this will involve, implement automation of the remainder of the sorting centers, large ones. That itself will take up to 300 crore. And of course, expansion of the existing sorting centers where, where the business has outgrown that size. So that is something, and of course, IT and all of that. So in general, a plan is quite straightforward. We're not doing anything which is totally extraordinary.
Right. And sir, this air cargo business, how much turnover in quarter 3 in 287 crore? Share of air cargo?
So it is around, yeah. So air cargo is almost 7 to 8% in this turnover.
7 to 8%.
Yeah.
Okay. All the best, sir, and keep it up. Okay.
Thank you. The next question is from the line of Krupa Shankar NJ from Spark Capital. Please go ahead.
Hi, good evening, and thank you for the opportunity. I had a question relating to the new segment contribution. So, Muktiji, you had mentioned that it's about 12%. Can you specify on what would be the contribution of Rail Express and the other two on the cold chain and C2C?
Sorry, I could not get your point clearly. Can you repeat, please?
Sorry, I was asking that on the contribution of the newer segments, you had mentioned that it is about 12% of our revenues in this quarter. Can you break it up between Rail Express and the other two, C2C and cold chain?
So, basically, if you see this two products we recently launched in this year only, pharma, cold chain and rail, that is not having any significant size right now. And C2C maybe have around 4% or like.
Okay.
Yeah.
Got it, sir. And my second question, is relating to the volume growth. So, what are the sectors, which had contributed to the growth, at least on the volume side in this particular quarter, and where were the key misses, if you can highlight on that? Sectors like retail and textiles, etc.
About almost the volume growth would be approximately, I would say, so in 9 months, volume growth is around 9 months. Yeah, is around 36%, and in this quarter is almost around 7.5% growth we have on volume side, and that's basically coming from the mix of again existing customer and newer customers. And as our endeavor is always to keep the balance in between of SME and big customer, that we want to be maintained, and that is also maintained in this quarter as well.
Right. So what I was inquiring more on was respect to the sectors. For example, the automotive sector or the textile or retail sector. Which are the sectors which are relatively contributing higher vis-a-vis others which are lagging behind because of perhaps a lower offtake in volume?
So this is actually this quarter is interesting because earlier in last quarter slightly textile sector was lagging behind, but in this quarter that also come up due to this all festival season and all. So in this quarter, every segment has contributed well. So basically no segment has been lagging behind in this quarter.
Okay, I understand. Okay, thank you and all the best. I'll get back in the queue.
Thank you. The next question is from the line of Rahul Soni from SMIFS Limited. Please go ahead.
Yeah, hello. Thanks for taking my question. So a couple of questions from my side. First is, what was your utilization rate for December quarter and during the last corresponding quarter of FY21?
Yeah. So our utilization level of this quarter was in around 85%. And in last quarter, we have 85.5%. 83% kind of. So this quarter is 85% we have.
Okay. And sir, apart from doing adjustment in your pricing related to changes due to fuel price decrease, have we seen any revision in rates, any upward or downward revision?
So this quarter is on term of fuel is flat basically, because in October prices has been increased sharply and then come down on November month. So usually there is no impact on side of diesel basically. It's flat.
Okay. Okay, sir, one last question. Like this Chennai and Nagpur sorting center, these are the new sorting centers. And are we also planning to do automation of any existing auto center, sorting center, like both the expansion or automation?
No, so we will be make it automation in existing one in Pune only, and then whatever automation we will be do in the future will be on a new one. Like Chennai would be also proposed for that. Nagpur is also proposed for that. So whenever we will be add on the new one, we will be make it fully automatic.
Okay, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Alok Deshpande from Edelweiss Financial Services. Please go ahead.
Yeah. Good evening, Chandra. Good evening, Muktiji. Two questions, sir. I just wanted to understand your outlook on margins. I'm sorry if you would have commented on it earlier in the call, but any outlook that you can give for this current quarter and going forward, how we plan to expand the margins, also in the near term, the pressure because of the fuel prices?
Yeah, so in this quarter we maintained 17% EBITDA level, and in Q4 we are also intend to have that kind of like in the range of 17-18%, and for the full year we will be increased by from over last year we will be improved almost 50 basis points. And same in the next 2-3 years, we also have a endeavor to be increased almost like 100 basis points in each year. That is our planning and strategy to be improved.
Okay. And Chandra, you briefly mentioned about once this phase of capex gets over, you briefly mentioned about another 400 to 500 crores of capex in a sort of a new 3-4 years phase. So what is the timeline of that sort of phase? Is it from FY23 onwards or even after that?
So Alonji, it will be start from FY24. Like we launched this 400 crore in a 4-year back, and hopefully by 22 we will be finished 300 crore rupees capex. Remainder 100 crore will be spent on FY23, and in next year we will be launched for the next 4 year again, and that would be also in size of like 400 or next 500 crore rupees plan. And again it is a very simple. We will be adding our sorting center and replace with the existing on which are on a lease. We will be adding on own one. And we intend to be have like every automated one. So this way is a simple one.
So Muktiji, this phase which will get over in FY23, the capacities that would have got added in this current phase, that should last us for the next 3 to 4 years as the revenue growth comes in. Is that a fair assumption?
No, so even in whatever capacity we are creating, that is actually having two advantages. It will be last even more than 15 years, because once size is just like in a 3 times of existing one, and another one is a kind of automation we are doing. That will also reduce my idle time there. So ultimately, it will be used for the 15 to 20 years even.
Okay. So that was my question, sir. Then the later capex that you're talking about, that is also for capacity expansion or just new locations?
No. It is again capacity expansion only. Location may be changed, but in the same area. So number would be the same, right? Right now we are 28 sorting center, and number would be the same. We are not increasing the number. We just add the capacity, and we also want to be automated.
Okay, sir. So I'll take more details from you on separately, sir. Okay.
Always welcome.
Thank you, sir.
Thank you. The next question is on the line of Preet from Wealth Advisor. Please go ahead.
Right. I think congratulations on very good numbers. So I think one question I had is that how much time would it take for you guys to set up the Pune automation, given your learnings from Gurgaon?
Sorry, come again?
How much time would it take you to set up the sorting center in Pune, the automation in Pune?
Yeah. So it will be taken around 6 months.
Okay. So in 6 months you will
start to that putting automation and then to make a final full run.
Okay.
6 months it will be taken.
That you mentioned there will be a 50-75 basis points improvement in terms of direct costs. But could this also lead to additional revenue? Because if your turnaround time decreases, then your service levels will increase. And would that then make TCI Express an even better solution for many clients?
Absolutely. That is the whole idea. That is the whole point. That, we bring the customer, customer experience or the goods faster to the, where they want. And I think this would be a very strong competitive advantage, against all competition and even air cargo for that matter. So going forward, with the enhancement of service levels, with the enhancement of, capacity utilization, point-to-point customer delivery also becoming faster, we could also see, gradual, much higher increase in pricing. So I think the effect of that, the domino effect of that will be quite strong, and that is what we have planned. We are making the company future ready.
Right. So, in connection to that, Chandar, wouldn't it make sense to fasten your capex and automate more centers rather than doing them sequentially?
Faster and doing like 10,000 crore rupees worth of projects and all that is not viable here in logistics industry. Everything. First of all, we are all self-funded. We don't need any loans from the bank, and doing anything faster is of not much value, because ultimately anything that is beyond the norm in India, the price point is almost 50 times more, and for doing that. So I don't think it's at all economic sense to make something which can be done gradually over time. And anyone attempting to set up several facilities without trial and error is definitely going to run into major hiccups. So it's better to be cautious.
Right. So, Chandra, what I was referring it to is that once your Gurgaon center is tried out and tested and you see the benefits on the ground, and say the model gets proven, then would it make sense to say in parallel set up automation at other centers?
That's what we have done. So once this is the next one is already ready, right? We already started working in Pune, and we just have to plug and play then. So that is the whole idea. Plug and play will be then everywhere. So the main learning would be coming from this Gurgaon center.
Okay. One other comment on sorting centers is that delivery is mentioning that all their centers are audit. So would we kind of be in similar lines, or is there any difference in how?
You must see their balance sheet. Their business is only B2C deliveries.
Right.
So we are not in comparison. They have conveyor belts which are maybe 5 feet long or 10 feet long. Here we are talking about 100,000 square feet, 150,000 square feet of automation of conveyor belts running around. So it's a totally different scale.
Gotcha. Lastly, on Rail Express, you're saying there's more traction there. So could you share any color in terms of how that's taking up, how the offering is doing with customers?
Sorry, can you come again kindly?
On the rail express side, you mentioned that you're seeing more traction on that offering, right? So could you share some color in terms of, say, how has it grown quarter on quarter, and what is the kind of feedback, and do you see this becoming a major revenue stream?
Yeah. So this is basically, rail is growing very well, though it is in very inception stage. And we are now expanding our coverage to city-on-city basis. Like we, started with 10 cities and now we almost reach on a 60 cities. And that is the plan to be reached by year end, to develop that, like 100 at least. So this way we are expanding. Business is low, obviously. That will be, increased in time to come. And customers are very excited to be, convert their air cargo, which is basically have with the competition, that we are targeting to be converted into in this business. And that is also going very well. So I think in next year we are planning to have at least 3-4% of our revenue in FY23 to make this business.
Okay.
Yeah.
Great. Thank you so much and all the best to both of you.
Thank you. The next question is from the line of Radha from B&K Securities. Please go ahead.
Thank you, sir, and congratulations on the results. Just wanted to know that this quarter, as per the presentation, we have seen that there is a stretch in working capital days, and we also have to take short-term loans for a short period of time. So is there a particular reason for that?
No. So if you see, whatever we have generated as cash, in last 9 months we have a capex of 65 crore rupees. And we increase the business, so slightly our receivable in days are the same, but in amount they have increased almost 20 crore rupees over March. And that's why there is a temporary increase on that capital working requirement. That has already come down in this January month. And it will be in the same level what we have in March 21. In FY22 it will be the same one. So there is no any pressure on the working capital cycle. In days term it is the same one.
No, but the working capital days that has been calculated is only on the basis of receivable and payable days. So that excludes the short-term debt that you're talking about. So I was asking mainly on the basis of receivable and payable days.
So payable days is also same. That's what I'm saying. If you see, increase of whatever we earn in a 9-month time, that has been put onto in capex plan. And whatever increase we have in a debtor, that has been funded through this short-term loan, which I already cleared in the January month.
Okay, thank you.
Yeah.
My next question would be that on a QOQ basis, we have seen that the utilizations have reduced.
Please speak louder, please.
Yeah. So on a QOQ basis, the utilizations have reduced from 85.5 to 85%. However, the employee expenses as a percentage of sales have improved for the company. So was this reflecting the higher automation due to sorting centers?
No. So actually, utilization level of almost just like 85%. And we over the period we added the capacity like due to extra load and all. So that's why this business is almost 289 crore business we have generated. Once volume will be increased, then we will be further get that benefit of utilization level, like we can be reach 86% or 87%. Yeah.
Broader perspective, just one last question.
Sorry to interrupt, Radha, there's a lot of disturbance from your line.
Yeah. Is it better?
Much better, thank you.
Yeah. So just one last question. What is the addressable market for these value-added businesses?
What is the what? Sorry?
Addressable market. That means how much market is available for these 3 businesses, which is C2C, cold chain, and the rail.
The market size?
Yeah.
You mean the market size?
Yes.
The market size, if you look at the quantum of logistics division of that in the cold chain as well as the C2C, possibly it's about almost 15% of the, almost 20%, 20 to 25% of the trucking part, road part trucking in the economy, and cold chain express is possibly not more than 3-4%.
Thank you. The next question is from the line of Aejas Lakhani from Unifi Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on the numbers. Mr. Mukti, I just have one question. In the 9-month period, what is the price increase that we would have taken as a whole on the business?
Yeah, so as a whole in 9 months, we have taken 2.5% improvement in pricing.
Okay, and that's been largely on account of the diesel pass-through, right?
No. Diesel is actually differently. We have diesel hike clause that has been passed on to customer, and this is pure and pure on just like a price hike, annual price hike we are getting from customers. Yeah.
Got it. And how do you see? So is it fair to say that every year we can take anywhere between 3 to 4% kind of price hike?
Yeah, that is our target to be achieved almost, at least 3%.
Okay.
So again, it depends because last year what happened, there is a sharp increase in diesel prices also. Then coupled with that to get the annual price hike, that is sometimes very problematic, or sometimes you can say it's a challenging one. Customer is not allowing to both kind of pricing. So it all depends. But our endeavor to at least get 3-4% on annual hikes.
Okay, and this is a reset that you do at the start of every year, or is it through the year? Could you just speak about when the reset takes place?
So it is always actually throughout the year, because whenever they make the agreement, then it is get renewed in each year.
Got it. Okay, so with different customers, it's different, so it takes place through the year. Okay, got it.
So over the period, yeah.
Okay, fine. That's it. Thanks.
Thank you. The next question is from the line of Vikas Khatri from Aviral. Please go ahead.
Thank you. Chandar, first, congratulations for setting up such a beautiful automated sorting center. My question is related to B2B surface. When quarter 3 usually is a festive quarter for the industry, when normally industry grows by 10 to 12% sequentially, we have grown by 4%. Have we lost some share because of the newcomer or aggression of players like delivery or spot-on? Second question is related to the weight. The weight growth, just Mr. Mukti said that is 7.5% quarter on quarter, while revenue growth is 4%. Has our realization per kg gone down? And if gone down, then how is our outlook in maintaining operating margin at the 16 or 17% level?
So thank you for your encouragement. The market share, has not been touched at all. In fact, the industry has not grown 10 to 12% this quarter. I have not seen any company or anyone not growing more than 1-2%. So, of course, if you have companies which can lower pricing and then grow substantially, but if you look at all sectors, especially auto sectors and the auto sector and in general FMCG and all of the other segments have not grown the way they grew in the first half. So I don't think we have degrown or not grown up to the industry standard. Second question, realization.
Yeah. Just to clarify on realization side, we had given number of 7.5% growth on 9 months. In quarter, we have just grown on 4% on volume side on sequential basis.
Okay.
So pricing has not come down actually.
And what's our outlook on the operating margin, which is hovering at currently at 16%? Previous quarter it was 16.5, and last year it was 16.9.
Yeah, so we will be improve almost 50 basis point in by FY22 end, and again subsequently 100 basis point in each year.
Thank you. The next question is from the line of Prateek Singhania from Sage One Investment Advisors. Please go ahead.
Hi, sir. Good evening. So my first question is with respect to the automation in the sorting center. So can you enlist like what all benefits in terms of the learnings that you have got into the Gurgaon sorting center?
Can you slightly louder, please?
Better now, sir?
Yes, please.
Yes, sir. So my question was with respect to the learnings that we have got from the Gurgaon sorting center's implementation in terms of cost, like when we had started it with what cost we had envisaged and then ended with what cost, and going forward per square feet basis based on the automation, like automation for Pune or other sorting centers, what will be the reduction in the cost, if any?
No, so because this is the first one, and whatever cost we have fixed, that is there, and we are implementing that. Once we implement that and see the results, practical results, see how we can, further compress, improvement anything, then we will be seen, I think, in Q1 of next year. Then we will be able to comment on that on cost part, on even equipment cost part, see how we can be, whether we can be excuse it or how we will be, going through.
Okay. So execution, like once it gets operationalized, the learning will flow in much more than what it is as on date.
Exactly, yeah.
And sir, in terms of capex, like because you are saying that the capacities that you are creating is good enough for 15-20 years. So when does this capex plan actually stops? Like after this capex, you are saying you are going for another 400-500 crores. So when will this exactly complete? Like how much crores you will be required to do the entire envisaged capex as you desired?
You're asking a question 10 years down the line. I do not think I have an answer for that yet.
Okay. All right, sir. This was the two questions which I had. Thank you.
Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good evening, Chandra sir and Mukti sir.
Good evening.
Yeah. My first question is on the Q4 visibility which you are seeing in the month of January specifically. So given we have a very high base for Q4 last year where we did around 280 crore sales, and if we have to maintain that 30% growth for the full year, which Mukti sir is also talking about, we have to grow on that very high base. So are you seeing demand coming back? What are your initial thoughts on the same for Q4?
Yeah, so we are seeing very good demand in because always if you see trend of last 5 years or 7 years, Q4 is always best one, and that way if subject to this third wave, if it is not impacting, like we are not seeing much impact of this third wave, I think it will be gone very well, and we will be surpass the number of Q4 numbers very much, and we will be finish the year at 30% plus kind of growth for the whole FY 2022.
Sure, sir. And the second question is, so now assuming we will get that 35-40% profitability growth for the full year. So sir, we will be ending up like 130-140 crore of PAT, and then we have depreciation also. So we have a very good cash flows versus so we will be spending like 100 crore a year if we even include the next set of capex. So sir, any plans of higher dividend or buyback, or what are your thoughts on the extra cash flows which the business will be generating?
Yeah, this is very good question. So you rightly said we will be have kind of like 200 crore rupees kind of cash flow from next year onwards. In this year, so I think we will be finished with the capex of around 90 to 100 crore rupees, and then we also announced the dividend in this time. So we almost 30 crore rupees we will be given as a disbursement of dividends. And I think that will be finished with that. And whatever excess we have, we will be put into investment in short term. Next year onwards, yes, when once we will be again keep growing our cash flow, we may be given dividend slightly on higher side. Like if you cover, you check from the last year. Last year we had given only 4 rupees per share as a dividend. We discussed that, and this year we already done is 6 rupees. So this way we will be keep growing on that way.
Sure, sir. The final question I have is on the value-added services. So we have like 4 segments, Rail Express, C2C, Pharma. So, sir, which segment do you think will reach, say, 150-200 crore number first? And maybe if you can talk about order based on the current visibility, where you are seeing the maximum growth, which can scale the fastest.
Yeah, so if it's again very early to comment on that. So firstly, C2C will be grown very fast. Then second would be like Rail Express, and then third will be the Pharma Express. Pharma Cold Chain Express.
Thank you. The next question is in the line of Rajesh Kothari from Alpha Accurate. Please go ahead.
Good evening, sir. A few questions from my side. This with reference to, if I look at the hub and spoke model of, delivery, and if I compare it with, TCI Express, so they have a mesh network versus, what is a one network. So can you just explain, what is basically, which probably business model is better, particularly in express logistic B2B, business? That's my first question.
No, so firstly, express delivery and express pickup is only possible through hub and spoke model. Now, hub and spoke model is not possible for B2C. And B2B hub and spoke model is possible if you have your own branches across the country and you have your own sorting centers. So the competition that you had mentioned, I don't think they have their own sorting centers or their branches. So I'm not sure what B2B express service they are providing.
Okay. So including this, but Spot On provides B2B, right?
Spot On provides, and Spot On is trying to, if you see their sorting centers, they're mini sorting centers, or they're, like probably little godowns which have been kind of manifested into being called hubs or whatever, But hub and spoke model requires substantial investment. And if you see their balance sheet, they do not have any investments of such sort. So saying something and doing something are very different, where these new age companies are more about saying than doing.
Thank you. The next question is from the line of Preet from Wealth Advisor. Please go ahead.
Right. Just one small thing. The EBITDA margin for Q4 last year was pretty high. Do you see any chance of getting to that number this quarter?
Yeah, I think we will be achieve that kind of EBITDA margin this Q4, but I slightly our manpower is slightly cost is slightly higher. So we may be like it may be flat off like last year. We may be achieve 19 or 20%. Yeah.
All right. Thank you.
Thank you.
Yeah.
The next question is on the line of Rahul Soni from SMIFS Limited. Please go ahead.
Yeah, hello. So just one more question from my side. Utilization rate. So if we see the data of last 4 or 5 quarters, we have achieved a utilization rate of around 85% on an average. So my question is it practically possible to have a utilization rate of like 90% or 95%? And what are we doing to achieve that kind of utilization rate apart from automation of the sorting centers? Are we? My indication is on towards increasing your business share to SME segment. So I think increasing your business share from SME, which is now like 50-50 between SME and corporates. So are we focusing that to increase our utilization rates?
Yeah. So you have very good question on that. So utilization level beyond 90% is not possible in this industry. So firstly, we want to be reach on a 88% to 90% first. Second thing, even still on 85 or 86%, this utilization level is very dynamic, which I was also explained in last call. Supposing like in one route we have 9-ton truck capacity right now, and we have the cargo of like 8 tons. Supposing tomorrow we have 11-ton cargo, then we will not add the another truck of 9 tons. Rather, we will be replace that truck with the kind of higher capacity of 14 tons. So this is always a dynamic capacity. That is not a static kind of thing or fixed kind of thing. Like wherever we use like 6-ton pen, then we will be increase up to 9 ton. If we are using 9 ton and it is reached to on such complete utilization, then we will be put into in 14 tons. So it is very dynamic one, and we will always have a scope to improve this utilization levels. Yeah.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you everyone for joining us here today. I would like to conclude by saying that we remain optimistic of the quicker economic recovery, and with a strong value proposition, we will achieve our targets. We look forward to meeting you in the next quarter. Please stay safe and healthy, and feel free to reach us in case any questions remain unanswered. Thank you.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you, everyone.